3 years ago, you could afford a house. Today, you can't. Your income went up. Your savings went up. You did everything they told you to do. But the house that cost $280,000 in 2021, it's $420,000 now. You're not alone. Meet Sarah. 32, registered nurse, Denver. $68,000 saved. 3 years ago, that down payment worked. Today, it doesn't even qualify her for a showing. The system didn't collapse. You just stopped mattering to it. And right now, while you're reading headlines about a strong economy and waiting for the crash that'll finally give you a chance to buy in, something worse is happening. You're being sorted out. Here's when it happened. Here's how you missed it. And here's who saw it coming. March 2020. You remember this. Pandemic hits, markets drop, housing prices dip 3%. Every financial advisor, every news anchor, every smart money voice said the same thing. Wait, this could be the correction. Don't catch a falling knife. You listened. Sarah listened. Millions listened. And then the Federal Reserve made an announcement. Unlimited quantitative easing. Interest rates cut to near zero. Trillions in liquidity. You thought, this will cause a crash. I'll wait for the real bottom. By December 2020, prices were back up. By June 2021, they exceeded pre-pandemic levels. By 2024, they were up 50%. Sarah kept waiting. You kept waiting. For the collapse. For the correction. For the right time. The collapse never came. But the sorting did. And by the time you realized what happened, the door was already locked. While you waited, the system ran a filter. Not a test of intelligence. Not a test of discipline. A test of one thing. Do you already own assets? Group 1. People who already owned assets. Their home equity surged. Their stock portfolios recovered in 18 months. They refinanced at 2.5% and bought rental properties with the savings. They got richer without doing anything. Group 2. You, Sarah. Everyone who did the responsible thing. You saved cash. You waited for stability. You avoided risky decisions. Sarah's savings grew from $60,000 to $68,000. Her purchasing power fell by $140,000. You didn't lose money. You lost access. This wasn't an accident, and it wasn't temporary. And this quiet, undramatic, barely newsworthy sorting, is what reorganization looks like. No collapse, no reset, no headlines, just a door closing while you were waiting for permission to walk through it. You've been trained to expect collapse. The Big Short, 2008, the Great Depression. Every financial crisis in the cultural memory looks the same. Dramatic failure, clear bottom, obvious villains, moment of reckoning. So you pattern matched. You waited for that moment. And yes, that moment came in 2008. Housing crashed 30%. Banks failed. Lehman Brothers collapsed. Clear bottom, right? Wrong. By 2012, asset prices were climbing again. But home ownership rates? They kept falling. Here's the thing nobody tells you. The assets recovered. The people didn't. The people who got pushed out in 2008? Most never got back in. They kept waiting for the next crash, the next opportunity. Sarah is living the same pattern right now. So are you. Except this time, there wasn't even a crash to mark the moment. Just continuous silent reorganization. And you missed it because you were watching for the wrong signal. Let me show you exactly how this works. Not as theory, as mechanism. Once you see this, you'll understand why waiting for collapse is the most expensive mistake you can make. Step 1. Stress appears. Something shakes the system. Pandemic. Bank failure. Inflation spike. Asset prices wobble. You see the dip. You think, here it comes. Step 2. Liquidity gets injected. Central banks respond within days, not to help you, to stabilize asset prices. The Fed buys bonds. Rates drop to zero. Trillions flood into the system. Here's the part that matters. That money doesn't come to you. It goes to banks, to corporations, to people who already have credit lines, margin accounts, brokerage access. Sarah doesn't get a check. You don't get a check. But someone with a $2 million stock portfolio? They just got an invisible $400,000 windfall from asset appreciation. Someone with 3 rental properties? Their equity just jumped $200,000. You're standing still. They're accelerating. And this is the moment most people don't realize happened. Not because it was hidden, because it looked like nothing. No alarm, no announcement, no "you've been excluded" notification, just money flowing past you to someone else. Step 3. Asset prices stabilize, then surge within 6 to 18 months, assets recover. Then they surpass previous highs. If you already owned stocks, you're fine. If you already owned property, you're better than fine. If you were waiting with cash to buy the dip, you just watch the entry point vanish. Sarah is still refreshing Zillow every morning. The houses she was watching in 2021 for $280K are now $420K. She didn't hesitate because she was scared. She hesitated because she was responsible, and responsibility became the most expensive choice she could make. Step 4. The costs come for you. 12 to 24 months later, the injected money reaches consumer prices. Your rent goes up 25%. Your groceries cost 30% more. Your car insurance doubled. Sarah's salary went up 8% over 3 years. Her cost of living went up 40%. The money she saved? It buys less every single month. And then the system resets. Not for everyone. Just for the people who had assets to begin with. They refinance. They leverage. They buy more. You fall further behind. This is the mechanism. No collapse, no drama, no news coverage, just continuous sorting, and you're on the wrong side of it. Stock market hits record highs. Unemployment falls to 3.7%. Consumer spending remains strong. Economy shows resilience. Sarah sees these headlines every day. Everything looks fine. So why does she feel poorer? Why can't she afford the same house she could 3 years ago? Because the economy they're measuring isn't your economy. Corporate profits, record highs. Stock market, record highs. Real estate values, record highs. Meanwhile, home ownership rate for people under 40, historic lows. Real wage growth, essentially zero. Median household wealth, stagnant. There are 2 economies now. One where assets appreciate faster than inflation. One where wages can't keep up with costs. You're in the second one. Sarah's in the second one. And the reason you can't see it is because reorganization is designed to be silent. Collapse is loud, bank runs, bread lines, emergency government meetings. Breaking news chyrons. You know it's happening. Reorganization is silent. Loan applications denied with no explanation. Bidding wars you can't compete in. Investment minimums you can't meet. Asset appreciation happening while you sleep. You don't know it's happening until it's finished. Sarah is still being responsible, still saving every month, still waiting for the right time. And every month, the door closes a little more. She's not failing. She's being filtered. And so are you. Here's the question you've been asking. When will the system collapse so I can finally afford to buy in? You're waiting for the crash. The correction. The moment when everything breaks and you get your shot. 3 years gone. Here's the question you should have been asking. Who is the system reorganizing around, and how do I position myself accordingly? Because the system isn't going to collapse. It's going to keep running. It's just going to keep sorting. Look at what's already happened. Every major asset category now has one thing in common. Ownership is concentrating faster than incomes can catch up. Stocks, real estate, farmland, even treasury bonds. The pattern is identical. Whoever already owned them is buying more. Everyone else is being priced out, mathematically, systematically, quietly. This isn't a broken system. This is the system working. It's just not working for Sarah. It's not working for you. And waiting for it to break so you can get your turn? That's not patience. That's just watching the door lock. Sarah can't go back to 2020, but she's not unique. She's the median case. Millions made the same calculation she did. Be responsible. Save carefully. Wait for stability. And millions are now locked out the same way. But here's what changes everything. Understanding what's happening while it's still happening. Here's what people who didn't get filtered were watching the whole time. Number 1. Who's buying assets at scale right now? Not retail investors like you and Sarah. Institutions, sovereign wealth funds, private equity, billionaires. Who's buying farmland? Who's acquiring rental properties in bulk? Who's snapping up distressed commercial real estate? They're not speculating. They're reading the reorganization signals before you see them. When BlackRock buys 20,000 homes, they're not timing the market. They know where the liquidity is going. They know which assets the system is protecting. Track them. They're the signal. Number 2. Where is liquidity being directed? Every central bank decision, every stimulus package, every bailout. Follow the money. When the Fed injects $2 trillion, where does it go first? Banks, corporate bonds, mortgage-backed securities, treasury purchases. Those are the protected assets. If you're holding the protected assets, you're inside the system. If you're holding cash waiting for collapse, you're outside. Simple as that. Number 3. What costs are accelerating fastest in your life? Housing, healthcare, education, insurance. These aren't random inflation. These are the sectors being reorganized around capital access, not affordability. If your rent is rising faster than your income, you're being sorted. If healthcare is eating 20% of your paycheck, you're being sorted. If education costs more than you'll earn in 5 years, you're being sorted. Track these 3 things, not to panic, not to time the market, but to understand which side of the reorganization you're on. Because here's what matters. Responsibility without access doesn't protect you. It just keeps you compliant. And the system is moving right now. Waiting for collapse means you're standing still while it moves around you. You can't go back to 2020. But here's the thing about reorganization. It doesn't happen all at once. It happens continuously. Right now, somewhere, another liquidity injection is being planned. Another asset class is being protected. Another group of people is being quietly sorted out. The question is, are you reading it or waiting for it? Because history doesn't punish you for being wrong. It punishes you for asking the wrong question too long. 3 years ago, the sorting began. Most people waited for collapse. The system decided who still mattered. That decision is still being made. Every day, every policy, every liquidity injection. Some stopped asking, when will it crash? They started asking, where is the system moving? You have the same choice. Keep waiting for the collapse that gives you permission to act, or start positioning for the reorganization that's already happening. The door is still closing, just slower than you think, and faster than you'd like. Subscribe if you want to see it before the door finishes closing. Welcome to Geopolitics of Money.